Good day, everyone. Welcome to another episode of Market Views. Today, it's me, Yuton, joined with Rufaro and Zenzi. To start off our show, we're going to talk about the Q1 trading update we got from CFI Holdings. Rufaro, just give us an overview, just a brief understanding of what is CFI, and you can later go into the updates and shares the views.
Thank you, Yuton. So CFI is this holdings company that's involved in agriculture, manufacturing, and to some extent, some real estate. And we know it from the brand names such as your Harvard, Victoria Foods, Farm City. And recently, like you mentioned, they released their trading update highlighting that their sales volume increased by 17%. And I was thinking to myself, what can we compare the retail division of CFI to? And I found out that we can compare it somewhat to OK, which for the same quarter had a sales volume increase of 8%. So yeah, to some extent they did better than that. But if you look at companies like Miko's at 32%. So yeah, there's room for improvement there. And also noting that Victoria Foods is now is out of judicial management. It was under judicial management. But the worrying thing with CFI Hilton, especially looking at it from the Zimbabwe Stock Exchange perspective, is the weak volumes. We call it in finance, it's a counter that's thinly traded. If you look at the price to volume graph, you will see that there is no really much demand for the shares of CFI. So that can be an impeding factor on price discovery for a counter like that. But looking back into history, CFI at some point used to be a very big counter on the Zimbabwe Stock Exchange, Hilton. And looking at that in some years, it could have a market cap growth that's even better than the GDP of the country until in 2018 where it got delisted and came back. This suspension, did I say delisted? It was suspended and the suspension was lifted in 2021. And ever since we've seen a shoot in the market cap. But yeah, the issue of the constraint on the number of shares traded still stands up as a big factor, but it has the potential of creating value for its shareholders with all these brands that we've talked about. And it would be interesting if something like pruning, carving out some of the divisions in the company so that you get value. We've seen those trends of unbundling on the Zimbabwe Stock Exchange, and it seems to create value. We saw it Econet unbundling cassava, and combined together they are way better. I think Econet and cassava, they control over 30% of the market. We saw that with the Simbisa unbundling a number of companies. So it could be something interesting if they unbundle and focus on a specific division that they think can create value. So potential is there in CFI, truth be told, Hilton.
Right. Thank you, Rufaro, for such a view. Zenz, what is your view on CFI?
CFI is a very interesting investment case, and it has very good assets which are underlying. And commenting on the sales trading volume of the previous quarter, which was released, it did very well in terms of revenue, and in the retail division, which contributed 86%, which was a slight decline from last quarter where it contributed about 96%. And also the coming in of the Victoria Foods and among other things, which contributed 10%, which actually shows a very good improvement in terms of the operations, those business recording profit. And also the farming operation contributing 4%. It comes with it's actually very negative news that the farming operations are contributing 4%, whereas in history, if you dig down from the period 2008, 2009, 2010, 2011, 2012, it contributed slightly above 30 to 40% of the revenue on the total scheme of things. So in my opinion, I'm also of the view of Rufaro that they actually golden parachutes, which people in the private equity space can actually come and talk with the guys from CFI and restructure the organization. But however, maybe it was a case of saying the group company, the CFI, will actually change direction in terms of how they operate after making Mr. Chibanguza the CEO of the group, who comes from a retailing family. So he has experience from the grassroots of retailing, and then with the education that he had over the years, actually one who was able to lead them into the retail space with retail space with a good strategy, since he knows that landscape there. Notably, also the CFI group also has a good balance sheet in terms of assets that are there, and possibly if God is acting in their favor with the litigation case that they have with the Sepoford real estate, it actually can unlock value for the shareholders that are there. But however, in the last quarter, in the month of February, we have seen it trading only 13, only having 13 trades with a total turnover of 1,845,000. So it speaks more into the liquidity that's there. Yes, there are other factors that are causing that shares to be thinly traded, which are the shareholder rankers that are there in the boss, which actually may prejudice the minority shareholders which have invested into the CFI shares. But it's actually a very good, interesting case. And also, notably, we have seen that agricultural stocks on the Zimbabwe Stock Exchange, they actually perform well in the dry season, and this company is actually better placed since it owns part of the grain terminal, which is Mozambique, which can be used to deliver grain to transport grain to Zimbabwe, since we are having a drought that can be used as a conveyance to deliver grain, and it actually has good assets that can be used to unlock value. And also in terms of the drought also caused it that decline in the revenue in the retail, because Seedco, you can see Seedco actually says that farmers didn't buy a lot of seeds because of the drought last day. But in terms of the investment case, CFI makes a very good investment case, Utah.
All right. Thank you guys for your views. Just another development happening on the Zimbabwe Stock Exchange. We received a prospectus coming from CBZ Asset Management, the Datvest Consumer Staples ETF, set to list tomorrow on the 3rd of March. I think this is the third ETF we are seeing on the Zimbabwe Stock Exchange, considering the other two received one last year and one beginning of this year from Old Mutual and Morgan & Co. Rufaro, what is your view on this Datvest ETF? Can you just give us just a rundown? What is an ETF? What is consumer staples? And then what do you see this as? And what are your projections? Or what do you think this will be in time, since we have the Old Mutual to back it? Yes.
Okay, so I'll first by answering what is an ETF.
Yes.
So ETF is short for exchange traded funds. So we are pulling a number of stocks together, then we make some units, we break them into units, then these units are traded just the way these stocks were traded on the exchange. So like you have said, we have seen an increase in the appetite for ETFs, with the first one coming in January 2021, the second one in January 22, and just 2 months after, we're seeing the listing of the third one, which most people in the streets are comparing to the first one, which is the Old Mutual, because they have some similarities. You will know that Delta controls about 16 to 17% of the market, and it's appearing in both ETFs. So this one is a modified consumer staples. What do they mean, Hilton? So consumer staples, these are companies that produce goods and services that are basic. So in terms of periods where our disposable incomes decline, we still need these basics. So that makes them very attractive, especially in an hyperinflationary environment where we are, when we know that our disposable income being eaten by inflation. And last month you had 30,000, which was enough to buy you luxuries. The next time you have 30,000, you now have to only focus on the basics. So they somewhat defend themselves from such effects, hence the term defensive stocks. And I can see the appetite in the market, Hilton. I was talking to my friends, and it seems everyone wants to get a piece of the new ETF by Datvest. But unfortunately, it's only about 70 million units, which surprises me. Why something is attractive as this one, only 70 million units? But it also speaks to, I think, the first selling price, which is going to be 1 RTGS per unit, which makes it attractive for anyone who wants to buy. So I can see the appetite. Tomorrow is going to be a very interesting day, as at least I'm sure a lot of people want to get a piece of the cake. The first one, they were very ignorant. The second one, they missed out, and I'm sure they've learned their lesson. And tomorrow I can see people trying to buy the ETF.
Yes, thank you. That is quite interesting. Zins, what is your take on this ETF?
Oh, the check of the ETF is actually a very interesting ETF. And coincidentally, it's the third ETF that's going to come on the 3rd of March, which is a very interesting in terms of those who are cosmetic, who are astrologists who believe in
Technical
stars
analyst.
and among other things. That it's a very interesting that. But now the ETF are actually very good for everyone in the market players who are all involved in the market. We have retailers now can actually get exposure to a nut food share, which they can on an ordinary day that they cannot buy that nut food share because it's actually in the north of 1,400, 1,500. That's the average price of the nut food share, which a retail investor can buy the ETF and buy into the ETF and buy into have an exposure into a nut foods counter. Yes. Also, for institutional investors, actually a very good development for them, since they can now use that asset class to park their excess funds that they have, in terms of whenever they want to do asset allocation, portfolio rebalancing, those kind of things, that those in-house issues with which institutional investors usually partake regularly, so they can take advantage of it. And then for those that are others in the capital market players, they're actually a very interesting case now. For the market player, it now means that now is now able to create more commission, since it tracks the ZSC consumer index. It means that whenever that underlying is being changed at ZSC, which they're following, which they're tracking, they can actually also change in terms of the constituents, which is actually a very good case for them, as it now means more money for them. But looking also at the nature of the ETF, it's actually very good, as what Rufalo alluded. It's actually inflation proof ETF, which investors can now invest into, since most of the companies that are there, we are going to use them in terms of, no matter how the macroeconomy is performing. We know we have nut foods that's there. We still need to eat. So at the end of the day, we still need to have a euphoria periods in between the week, during the weekends. We drink, and even our salaries are depressed. We are still going to buy our chibuku. We are still going to buy those brown bottles, which are low end beer from Delta. So in my opinion, it actually makes a very interesting case. And also comparing with the one that Rufaro was talking of, that people are also comparing with the old mutual ETF. They're both passively managed, and which means mostly in the long run, passively managed ETF, they actually perform better than those that are actively managed, which the one now in our case is actually the Morgan & Co ETF, which is actively managed. And the goodness of an ETF, of this kind of ETF, it actually is a benchmark where those investors, those high net worth investors that want to have people investing for them into the ETF, they can actually now benchmark the performance of their asset manager against the ETF, against the benchmark of the Series E index, and then you perform. So there are very, very, very many advantages that which come with that ETF, which in my case actually is the CBZ, the Datvest ETF, actually makes a good case.
Right. That is quite positive for this Datvest ETF. I think the only question you can now ask is, are you going to buy this ETF? Are you considering having a position on this ETF? Yes,
definitely. Once the market opens tomorrow, we're definitely going to buy. But probably to just highlight that Zenzi talked about the beauty of the passively managed ETF, but also the beauty of the actively managed ETF is that once a sector starts going down, the actively can allow you to move to sectors that are performing well at that time. So it gives you an opportunity to show your management skills, so that you outperform the market. So yeah, that's an advantage of the actively managed Morgan & Co multi-sector ETF. But this one, yeah, definitely tomorrow.
That is quite good news. So see you tomorrow on the market. Thank you everyone for having us today. We're going. Please subscribe to our YouTube channel, Vincent Capital. Like, share this video, Facebook. Like our page at Vincent.